All right, guys, good morning. Good morning. Welcome to our morning note. My name is Carlos Garcia, founder and CEO of G.A.R Capital. Welcome aboard. Let's go ahead and talk market, shall we? Before we begin, let's go ahead and tell you about subscribing to our channel. Bottom right hand corner of your screen, there's a little white square. Click on that square. Turn notifications. Subscribe to our channel. Like our videos. Really do appreciate it as always. Thanks for joining us. All right, let's talk about the markets. Dow futures are down 113 points. NASDAQ futures down 63. S&P futures down 19, and Russell's down 21 points, nearly 1%. Big news that came out today. Oh, and also gold is down 0.32%, silver down 0.85%, and bond yields are bouncing here, 1.385% on the TNX. Again, I've been harping about the TNX and keeping an eye on that. Let's also take a look at crypto. Ethereum is down 2.74% at 1967 on the future side, 32,295 on Bitcoin, down 1.42%. So we had the CPI print this morning. This is the inflationary data, consumer price index. Let me give you the information here. Let me read it to you. Have it here on Twitter. Okay, US CPI month over month, 0.9%. Estimate was 0.5%. The previous was 0.6%. CPI excluding food and energy month over month, 0.9%. Estimate of 0.4%. The CPI year over year was 5.4%. Estimate of 4.9%. Previous was 5%. Excluding CPI excluding food and energy year over year, 4.5%. Estimated was 4%. So this is where we're getting a little pressure from, was that hotter than expected CPI number. A couple of things to keep in mind. This is from CNBC. Inflation continued its rapid surge in June, rising at its fastest pace in nearly 13 years amid an ongoing burst in used vehicle costs and increases in both food and energy, the Labor Department reported Tuesday. The Consumer Price Index increased 5.4% from a year ago, the largest jump since before the financial crisis. Economists surveyed the Dow Jones expecting a 5% gain. Stripping out, we talked about that. This is the sharpest move since September 1991, excluding food and energy, well above the estimate of 3.8%. Keep in mind, this is from CNBC. Inflation has been escalating due to a number of factors, including supply chain bottlenecks, extraordinary high demand as COVID-19 pandemic eases, year-over-year comparisons to a time when the economy was struggling to reopen in the early months of the crisis. So keep that with a grain of salt in your head. That, of course, last year's economy was completely different from this one. Again, I use the analogy, if you had a hot dog stand or a restaurant back last year in 2020, you probably weren't selling as many food items or getting as many customers. But if you compare it to this year, obviously with demand going up, people are shopping or eating at your restaurant or eating your hot dogs, you're more than likely going to raise your prices due to demand. Perfect example, you could see that it would be hotels when you're traveling. Of course, hotels and flights and what have you. Obviously, it's not part of the CPI, but again, it's just something to think about. To me, does this mean anything in the long game? No, it doesn't. I think that these are just opportunities, little dips to buy, in my opinion. The bull market is still intact. Of course, if you look at E-mini futures on a daily, this move doesn't really do anything in terms of the long game here. You could see 43.60. All-time highs of 43.79. We're about, 20 points away from all-time highs anyways. We're all-time highs up yesterday on S&P, NASDAQ, and Dow. So, guys, this is just the way it is. You get ebb and flows up and down. Nothing has really changed on my end. We're hugging the 50-day moving average. So, to me, again, look for opportunities in possibly tech for names that you wanted to buy on the cheap, and then you can go from there. But, again, don't buy on every single dip. Find a price that you want. Maybe go by moving averages on the daily is what I usually do. And that's probably your best bet to actually see the opportunities out there. So a couple of things did come out today. We did have some earnings reports from Pepsi. They did beat. You also had JP Morgan. They did beat as well. And Goldman Sachs blow past their estimates. Also, Goldman Sachs raised their guidance, their estimated guidance on Tesla. Goldman Sachs analyst Mark Delaney reiterated a buy rating of 860 on Tesla, while raising their guidance. Just wanted to send that over to my team. I think they got that. So either way, that's where we are. We did catch Tesla yesterday. Let's take a look at it this morning. It's really that level is 700 to break. Again, that's that tough level to break. 691.65 should get us there to 700. I saw that the 700 calls yesterday, which we played yesterday, had nearly 120,000 involved. So again, just something to think about. JP Morgan's price, again, I have some calls here. You could see we did dip below 156, below 155.65. But with this strong CPI number, what have I been saying? Financials will benefit from higher rates. So again, if you do believe rates will go higher near 1.7, 1.8, possibly 2%, then you definitely want to load up on some financials here, especially JPM and Goldman Sachs, which I think are the top two. The only other one I think is great is Morgan Stanley. Citibank is okay. I like Citigroup. I actually bank with them, so I like them. Obviously, I always say with people who invest in companies that you actually do business with, because when you have a flush or a fall or anything like that, it's going to keep you invested in the company. You're not going to be as worried. So that's where we are. Again, you could see Tesla did fall a little bit. Obviously, with that hot CPI number, tech is going to take a little bit of a back seat due to that CPI number. You can see Apple is under a little pressure. The yields are right now at 1380. Right now, short-term resistance seems to be around 1.4 on the TNX, or 140 or 14, excuse me. 15 would be your next, and then 15.5 would be your resistance level 3. So just keep that in mind. So what are some of the names or some of the sectors to watch for, again, if you're playing the inflation data? Let me go ahead and bring up Safari here. Let me go bring up a window, and I'll show you FinViz. Give me a second here, and then we'll answer some questions. FinViz, and this would give us the full scope or the full map. If you watch the aftermarket recap, you know I live on this thing. I love it. So you could see basically Pepsi Cola is up 1.41 pre-market. You could see EA Games, Activision is up. Morgan Stanley, Goldman Sachs, all up. JP Morgan coming back near to break even for the morning. BlackRock doing well as well. So again, all the capital market banks, Morgan Stanley, Goldman Sachs, the major ones. Schwab is down slightly. They're boosting up off of Goldman's great number. I expect Morgan Stanley to have a great number as well. They're one of the stronger ones. BlackRock has done excellent work as well. Obviously, they work with the Fed on buying bonds. So BlackRock is part of the deal. But for the most part, again, you could see not really much sharp moves. Let's take a look at some pre-market movers as well. If I can bring this up. Thought I had it here. Pre-market movers on investing.com. Let's take a look at it. You could see none of these names I really do know. Again, you could see some crazy ones out there, penny stocks, what have you. Boeing's down 2% on headlines from their Dreamliner. Again, we talked about Goldman Sachs. Coca-Cola, again, consumer defensive names do well in a higher rate environment. If rates go up, Apple sliding down a little bit after a great week last week. Microsoft pretty much flat. Walt Disney had a great day yesterday, up nearly 4% from that Black Widow opening. Bank of America slightly up, but that's where we are this morning. AMD, again, so tech is taking a little bit of a hit, but Baidu, JD.com, Alibaba up nicely this morning after the Chinese said that they're willing. I have a tweet here. Let me see if I can bring it up here. This is from the Boeing. To temporarily lower 787 production rate to lower than 5 per month, as identified additional rework that will be required on undelivered 787s. So there you go. Also, Goldman Sachs, the recent increase in inflation is to be transitory. There you go. You can debate that all you like. Space is down. Pre-market will take a look at that for a second. But Alibaba weighs a bid for Unisplendor stake for nearly 7.7 billion. And then I also had one more headline here. This was from overnight from China. I think I had it here. That China was working on easing, I believe, monetary policy. Let me just make sure. I want to get this right for you guys. I think I had it from overnight. Okay. This is China's Premier Li. China opposes monopolies and unfair competition. Okay. But I had one more headline to read. Here we go. China's Premier Li. We will implement significant efforts to alleviate the pressures caused by increasing commodity costs. So there you go. That's where your headline is for Alibaba, where the actual stocks and the Chinese stocks have actually bounced back. I love Alibaba. I own them long term. JD.com, I did see some unusual options activity. And Excuse me, I was trying to get my glasses. My apologies. So that's where we're at for the market. Seeing J.P. Morgan starting to get close to break even. Tesla starting to bounce a little bit. Let's take a look at E-mini futures really quickly. Right off that 50-day moving average, Apple starting to bounce. So again, you're starting to see some movement here. Let me just get my glasses because I'm blind as a bat with this monitor. Thank you, honey. All right, good morning. Let's go ahead and answer some questions. All right, good morning. Carmen's asking, read an article from Megdalio, bubble market indicators, and he was signaling areas that are very frothy in a bubble. He said bullish sentiment isn't a bubble. Thoughts? Well, I've heard that many times. I remember I posted yesterday regarding all-time highs, and then I've gotten like 7 comments saying that the crash is coming. I've been hearing about a crash is coming for years now. Again, in my account, the world's ended about like 30 times this year, and about like 1,000,000 times last year. Listen, are there some bubble pockets in the market? Sure. But again, if you look at the market as a whole, again, we talked about the equal weight S&P yesterday. You're not getting just tech carrying the market. You're seeing sectors participating. Again, you saw financials participating, industrials participating. You saw energy finally participating months ago. So again, you're starting to see what we call resurgent economy from a bear market or a recession. We had a recession last year. Again, historically speaking, we have not had a recession, another recession, back-to-back recessions within 2 years of each other since the late 70s and early 80s. So again, usually, historically speaking, what you have is you have a recession, and about 7 to 8 years later is the bull market throughout that time, and then you get another drawdown. So that's usually what happens. Again, rates are very low. Again, you have a very, very accommodative Fed, and of course, liquidity is available. So again, we just had an article saw an article on Bloomberg about small business optimism being very high. So are there some pockets frothy? Yes. The next bubble, if you had to take a look at bubble, would be SPACs. SPAC would probably be the one that would drag a slice of the market down. But again, there's so many other companies that are doing excellent things. Again, you see Chipotle at all-time highs. You've seen the mega cap names carrying. You see semiconductor names doing well. You see the automotive companies doing well. You see housing doing well. You see materials doing very decent. You see financials at nearly all-time highs. Again, it's not just one pocket. If you're talking about it as a whole, a bubble, sure, if you start getting to the point where inflation starts hitting double digits, okay, sure, that's something to watch for. That could be a headwind to the market. But do I see anything in regards to a correction of more than 10% by the end of the year? Absolutely not. You can call me extremely confident. You can call me extremely optimistic, but I just call it like I see it. Do you expect the USD to keep climbing through the year? Let's take a look at the Dixie. The Dixie is bouncing. It's up about 0.5%, but if we go to the daily, it is looking to break out above 93.11. That's a 4-hour chart. Let me bring up a daily chart to make sure. Let's go ahead and bring up the daily chart on the Dixie, and you can see if we bring up a 3-year chart, your highs back in March, $102.97. That's the index, obviously. But really, your next level is 94.46 if we're just going by the fib retracements. Again, we're right above the 23.6. Does this show bullish to me? Not really. I mean, again, a higher dollar. Again, you can't have high inflation with a strong dollar. It doesn't work that way. So again, if you think hyperinflation's coming circa, 1930s Germany, fine, then you're expecting the dollar to go lower. But you can't say inflation's coming while the dollar is going higher. It just doesn't work that way. Again, the market is forward thinking. I guess the expectation is, from what I see, is that the Fed will do some kind of intervention while tapering or raise rates or something like that to affect which we're bringing the dollar up due to inflation. But again, remember the inflation targets for the Fed is 2%. That's what they want consistently. But really what they're looking for is the labor market. So that's their main focus, is unemployment to be lower. Thoughts on the real estate market? I just bought a home this year, so I personally hate real estate. I hate dealing with real estate. I think it's a huge pain in the ass, closing and dealing with title companies. This is just me. I'm not a real estate investor in exactly properties other than my personal home. What I do own is REITs. Again, real estate is a great investment. I'm not going to sit here and say it's bad. I'm just really lazy. I prefer stocks, prefer dividends. That's just me. But I still like the real estate market. Absolutely. Is NVIDIA a buy or after before the split? It really doesn't matter. It's the same thing. Do you want 4 quarters or do you want $1? It's the same exact thing. Anything below 800 is worth a buy on NVIDIA, in my opinion. Okay, let's take a look. Sorry, I had to learn on my watch. So you see where Roblox going. Okay, I do own some Roblox. I do like Roblox the long term, obviously. But again, I liked this company. They've had some great earnings. I think they go higher. I think $100 definitely by the end of the year is extremely possible. I think more than likely. So again, anything below 77, I'll be adding to Roblox. I like it. Shell and Q3. Shell's in Europe, so I don't think I have access to Shell, the stock. Let me see. I think it's. Let me see if I can bring it up. Royal Dutch Shell. I think I have it here. Royal Dutch Shell. Looking at the chart again, this is a European traded company. Again, oil companies are fine. Again, it's all on OPEC. I like XOP, which is the Exploration and Production ETF. I own that. If you like Royal Dutch Shell, go for it. They pay a dividend. No, no worries. No worries, Lurk. Thank you so much. He says thank you for breaking down the info for us. Lots of valuable learnings. Absolutely. Think of this as like a teaching session every day, every morning. CPI higher than expected. Rotation in financials. Well, JPM did have their earnings today. It did fall a little bit on the initial print, but then with the CPI number, you see financials are bouncing here. But again, with earnings, obviously you have to be careful. But again, if you see any opportunities out there, again, I really want to buy some Goldman Sachs, but I'm waiting for at least a little bit of a dip here. I don't want to buy at highs. You could see 390.23. I did a little bit of a trend lines here. 393.26 is looking here on Goldman Sachs. Really, my price target by the end of the year is 400. Was that enough for me to buy the stock right now? No. If it gets around 360, I was hoping for them to miss so I can get to 360 and possibly buy there. But I love Goldman Sachs here. They're not beholden to commercial banking and especially credit risk, just like like Citibank and Bank of America, for example. The only credit card I know that they offer is really the Apple Card. And actually, funny stuff. Bloomberg actually posted an interesting article on Apple maybe making a Premier card. If you're an Amex Platinum holder, credit card holder, or a JP Morgan Reserve, Sapphire Reserve. And I'm all about credit card rewards. So again, any credit card that gives good rewards, I'm in. I love it. I use it like a debit card. The word is that Apple may work on some kind of credit card with Goldman Sachs on that. Something to watch. Again, another growth opportunity for Apple. I love that company long term. But again, rotation into financials could be temporary, especially with earnings. But again, still, I believe tech is still going to run and carry this market, especially in Q3. Let's take a look at Open. I believe this is Open Door. Oh, Open Door Technologies. I don't know much about them, to be honest with you, but I can see they're at nearly daily support, yearly support. 1446. Again, if you're looking for an opportunity to buy the stock here, go for it. Nothing wrong with doing that. Now I'm seeing JPM starting to move up. Great. I have calls with the team. Looking at Open Door here. Again, if you like the stock long term, again, this is probably a great chance to buy. It is down pre-market. So again, I have to research it a little bit more. Palantir is a great company. I've researched them. I think they're an amazing company. Their price action reminds me of Amazon the last 8 months before the breakout. Really, the level you need to break is around $28. Anything below $17.50 is a buy for me. I'll be buying around $17.50, maybe $18. Again, your patience will be rewarded for this company. I love this company long term. I love their growth prospects for the next 5 years. Any plays on XLF? XLF, again, guys, XLF is more of a long-term play. So again, take a look for leaps. Again, me and Unusual Options Activity Crew, Premium, and Masterclass have been on top of XLF and XLE for that rotation the past couple of months. So I love trading it. XLF, to me, if you want to get a break, it's really just right around here, 37.40. If you get a break above 37.40 and you expect interest rates to go higher, if I see volume pick up on the activity side, again, a lot of people were asking about it. Just go to scan here on TOS, go to volume on their option, anything above 10,000, click scan. You'll get everything that's been trading above 10,000 contracts for the day at that point. Now, again, don't just use that to trade. Use that plus your charts to give you the actual roadmap on how to make a trade. But again, it's something to think about. But XLF, again, I like XLF trading it for leaps, meaning usually a couple months, but not intra week. You're welcome, Carmen. Thanks. FTNT. I don't know what this is. FTNT. Oh, Fortinet. I don't know much about this company either. My apologies. I'd have to research it. But looking at it, looks absolutely like a monster. So again, if you hold it, you're owning it. Own that thing long term. It looks great on the chart. On the daily, it looks amazing. Probably no options volume, but there we go. But yeah, Aurelio says the scan is very helpful. Yeah, guys, these are the tools that you can use. Again, this is what I use for unusual options activity. I can't sit here and say that's all I use because that's not true. But again, it's something to think about, something to use. It's just another tool. Think of it as a hammer, nails, pliers, whatever. But you can't build a house with just a hammer, guys. Again, you need more than just a hammer to build a house. So I don't want you just depending on options volume because it's more to it than that. So we'll leave it at that. All right, guys. No live trading today for the YouTube Premium. That will be moved tomorrow. I sent that yesterday. Great week last week. Let's continue the ball rolling. Tomorrow will be the day that we'll do it, and we'll do another hour together. That's always fun. I really enjoy doing the live trading with you guys. If you guys want to enjoy the live trading, very simple. Just go to GARcapitalFX.com. I trade every week live with you guys. Think of it as a teaching session every week, 1 hour. You just go to YouTube subscription under trading services. This is powered by Google. So again, billing doesn't handle any of the billing stuff. It's through YouTube. So again, something to look at. It's $49 a month. Again, if you just want to trade with me an hour a day, hour a week every month, which is 4 hours a month we trade. So together live. If you like the morning note, this is exactly what it is every week, Wednesday and Tuesday. Wednesday or Tuesday, depending. But this week will be Tuesday. All right, guys, we'll leave it there, guys. 10 minutes before the bell, you're seeing the evening futures bouncing off that 50-day moving average. Let's see what we get for the day. I'm going to take one more look at Alibaba. I have calls, and you can see we're above that breakout level that I was looking for. There was a gap fill right here. We finally filled it. We broke above it. That is now new support, 207.84. So let's see if we can continuation. I have the 212.50s. Let's see what we get. Have a great rest of your day, guys. I'm off to have some breakfast. Cheers, guys.